So Raj, coming back, you did mention that it's only domestic and it's international. Now, how do you go about researching these companies? I mean, what kind of companies are you looking for? You did mention Amazon, you did mention Google. These are trillion-dollar companies. So why I ask you this is, a lot of times it's obviously a little bit of common sense also and a little bit of popular belief also that if I bought a very large stock, very expensive stock, or a very large trillion-dollar kind of a company, the growth that would have vis-a-vis if I bought a smaller company which might become the Google of tomorrow or which might become the Amazon of tomorrow, maybe the growth in that company is that much more faster and that much more rapid. So there must be some sort of logic on or some sort of research that you apply to these international companies before you invest in them. And how is that different? Sort of, if you can bring that in, if you have different parameters to look at Indian stocks also. So what kind of companies, what sort of research do you look at, and is it different for Indian companies?
So, qualitative factors for both Indian and international companies remain the same. So, we want to partner with quality management where we can trust them, and at the same time, the valuations that we pay for are also very similar. So, the only thing is that the quantitative factor, so something like a return on capital or a return on equity that we look at for Indian stocks and US stocks is a little different given the interest rate differential between the two countries.
I see.
So traditionally, US interest rates have been lower than the Indian interest rates, as you would know. So the return on equity numbers and the return on capital numbers for US companies are also typically lower than the Indian companies. So those quantitative numbers are a little different while evaluating international companies, but the qualitative factors remain the same. So based on the qualitative and the quantitative criteria that we filter down the companies. Then out of the whole listed universe, we come down to about 700 companies which are listed in India and globally. And in
Okay.
those 700 companies, what we do is we divide those 700 companies between the different analysts in our team. So the analysts are divided sectorally. So if an auto analyst is looking at Tata Motors or a Maruti Suzuki in India, he will also look at a Toyota or a Renault Nissan globally. So that's how we are divided. And if say a person is looking at a sector globally, then he will also get a competitive scenario, what is happening globally, etc., and what are the trends or the disruptions which can come in the future. So that's how we look at companies both India and global.
All right, thanks, Raj. There